Economists are talking about the possibility of a real estate bubble. Could that be true? Let's find out. Hello, everyone, and welcome back to another episode at Novarise Invest, your channel for financial education. So today's episode will be about the real estate market. Could it be possible that we're actually coming close to hitting a real estate bubble? And this article that I'm about to share you, it's going to show you the facts. All right, so we have this article provided by Fortune magazine, which you can easily find on Yahoo Finance. I'll include the link down in the description box below. But as you can see in the title, another housing bubble. We're skating close to one, according to a Realtor.com economist. And as we're scrolling down through this article, we just simply go over the facts once again, right? So to date, this might be the hottest housing market ever recorded. Over the past 12 months, U.S. home prices are up staggering 19.2%. For comparison, in the years leading into the 2008 housing burst, the biggest 12-month jump was 14.5%. Now, heading into 2022, real estate research firm forecasted that the ongoing housing boom will lose some steam and home price growth will decelerate. It hasn't come to fruition yet. Actually, if anything, this year has gotten a bit hotter, with housing inventory on Zillow down 52% from pre-pandemic levels. So it seems that the original forecast was indicating that the housing market could have had a deceleration, but because of the low inventory, chances are things could be a little bit different. So let's just continue through the article. Now, we're not in a housing bubble just yet, but we're skating close to one if prices continue rising at the current pace, said Joel Raichu, a housing economist at Realtor.com, in an article published last week on the home listing site. And as we keep scrolling down through this article, you're going to see this nice graph here highlighting the year-over-year change in the S&P CoreLogic case for the home price index. And it shouldn't be a surprise here. This is where the housing price enter into a correction and the property prices, they crash. So now the question is, given this high volume of increases triggered by the lack of supply of building materials, by the lack of supply of houses, and everybody looking to buy a property, could this situation lead towards a real estate bubble? I don't know. Let's continue seeing. So according to this article, there is a growing chorus of economists speculating that if home price growth doesn't abate soon, meaning it doesn't go down, doesn't slow down, the housing market could eventually overheat. Or worse, we could wind up in another full-fledged housing bubble. You see, back in March, researchers at the Federal Reserve Bank of Dallas sent a shockwave through the industry after releasing a paper titled Real-Time Market Monitoring Finds Signs of Brewing Housing Bubble. That's quite disturbing, right? And according to the Dallas Fed researchers, they were actually very blunt in their assessment. And, quote, U.S. house prices are again becoming unhinged from fundamentals. But according to the Dallas Fed, things could be a little bit different this time because even if we're in a housing bubble, the Dallas Fed researchers don't think it will be a 2008 repeat. For starters, homeowners are in much better shape now than they were heading into the 2008 meltdown. So why is that, right? Well, this is key here, paying attention to the date. So back in the 2000s, U.S. households were spending 7.2% of disposable personal income on mortgage debt payments. And as of the fourth quarter 2022, that figure is only 3.8, which, could mean a good sign, meaning that families have more income and whatever they're allocating towards the mortgage payment is not really consuming most of their household income, right? Now, as we continue through the article, it says here that in addition, subprime mortgages are less of a worry these days, given the 2010 Dodd-Frank Act, which outlawed many of the shady loans that plague the aughts. It seems that a common theme here is that households are currently in a much better financial situation here than back in 2007 and 9, right? So according to this article, there's no expectations that follow from a housing correction will be comparable to the 2007 and 9 global financial crisis in terms of magnitude of macroeconomic gravity. Among other things, household balance sheets appear in better shape, and excessive borrowing doesn't appear to be fueling the housing market boom, according to the Dallas Fed researchers. So here they have a very interesting graph over here. And what it does is that it's showing the mortgage payment to income ratio. And back in 2000, you can see here that that ratio was somewhere up here over 25%. And then over 2006 and 7 over here, that's when it hit record highs and it exceeded 30%. But over here, if we pay attention to 2022 here, it seems that we're back on that trend, which is the reason why some economists are starting to worry that even though some families could be in a much better financial situation, things could still lead down to a housing bubble because of this mortgage payment income ratio. So this is the information that the Dallas Fed is sharing right here, but some other economists seem to be disagreeing, right? So let's see how the article unfolds. Historically speaking, U.S. homeowners are in a fairly strong financial position, but they aren't who economists are worried about, you see? So instead, they're concerned about the next crop of home buyers, meaning the newer generations that are competing in a market where housing prices are really high, and not just that, inventory is also low. So as we move along, back in December, the typical American household will have to spend 24% of its monthly income to make a mortgage payment on the average price U.S. home, according to Black Knight. Now, for those who don't know, when you're comparing your mortgage to your income ratio, lenders typically prefer you to be under that 30% utilization. But according to this article here, things are changing a little bit because according to this, at the latest reading this month, Black Knight's mortgage payment to income ratio was now up 31%, and that is the highest reading since September 2007. Okay, so what's going on? Well, the swift move up in mortgage rate over the past few months has dramatically increased mortgage payments for new borrowers. That shouldn't be a surprise at this point, right? The rise in interest rate has been a topic of conversation for a couple of weeks now. And so back in December, the average 30 years fixed mortgage rate stood at 3.11%. And at that rate, a borrower could owe a $2,138 monthly principal and interest payment on a $500,000 mortgage, right? Now, a borrower who took out that same mortgage at the current average rate, meaning 5.11%, could owe $2,718 per month. And over the course of the 30-year loan, that's an additional $208,800 in payments. That's a lot of money on additional payment, right? And as we scroll down, we have a nice map here of the US, courtesy of CoreLogic. And this is showing how CoreLogic is rating America's largest housing market. And we see a lot of red here, right? So there are a bunch of houses here, 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 especially in Florida, and then along the East Coast that now are overvalued, with still a few states here that are still undervalued for those who are looking for cheaper states to invest in. This is actually a nice area for you to look into right here in the picture. And like I said, I'll make this link available for everybody down in the description below. So very interesting map to take a look at. And as we scroll down here, every single major real estate research firm with a publicly available forecast model projects that home prices will continue to climb over the coming year. All right. So over the coming 12 months, Zillow predicts home prices are poised to spike 14.9%, while CoreLogic forecasts a more modest 5% jump, while the Mortgage Bankers Association predicts prices will climb 4.8%. And industry insiders do say that there's a chance the economic shock caused by soaring mortgage rates could see home price drops in some regional housing markets. So back to the original question, are we really heading into a housing bubble? Yes? No? Let's find out. So according to the same economist from Realtors.com, some markets will see a correction if mortgage rates continue to rise, in which sales will drop and prices will follow. While housing economists who have spoken to Fortune aren't predicting a housing correction or a crash, they do see a market that's starting to reach concerning levels. Earlier this month, CoreLogic provided Fortune with its regional market risk assessment scores for around 400 metropolitan statistical areas. The real estate research firm aimed to find out whether local income levels could support regional home prices. And the finding? CoreLogic now considers 65% of U.S. regional housing markets to be overvalued. That overvalue label was placed on every metropolitan statistical area in Arizona, Florida, Texas, and Nevada. And once again, here's the map that paragraphs was referring to. So it seems that things are still somewhat uncertain. However, the housing prices or the mortgage payments are reaching now concerning levels, and everyone should be monitoring what's going on in the market. Everyone should be on the lookout. So that's the latest update I have for you. And while I still have you here, make sure you check this episode somewhere on the site in here. That's going to help you complement everything you just learned today. And I'll see you soon. Take care. Bye-bye.